Hi, Miss Knowles.
Good morning. Good afternoon.
Hi.
Recording in progress.
Well, I see it's under you. I know one student message says she won't be here tonight, so yeah. Chapter 9 is quite short, so we'll finish with that. So we can try, because chapter 10 is going to be like 2 classes. It's not going to be as short as 9. So, and then, well, I was supposed to send y'all assignment, but I changed my mind to give y'all assignment, because I'm not going to give any more quiz, because like I say, the quiz, y'all have to go by this. So I'm just going to give y'all some more assignments to account for that 20%, which is the quiz and the assignment.
Okay.
Yeah. Because quiz now, you have to go to BIF, so I don't think that's, so we'll just, I'll give you the assignments instead of any more quiz. You'll get, well, assignments. So I will incorporate, I'll give you assignment on chapter 7, chapter 8, and chapter 9. But I will break them down into each chapter. I won't give you them all together, like mix them. So you'll know what is chapter 7, what is chapter 8, and what is chapter 9. Yeah. Hi, Miss Burrows.
Hey, good day.
How are
How's
you?
everyone?
Good.
I ain't feeling too good, but
Me neither.
yeah.
And I did that booster on Saturday from there. So I ain't feeling good myself.
Yes, that's probably a stomach virus, because my stomach been killing me for a couple of days now.
Jesus, I need no stomach virus, Lord.
Yeah,
Yeah.
my daughter a few weeks ago, she had a stomach bug and that did her so bad.
What?
Oh God.
Yeah.
Mm.
Yeah.
I
I don't feel
trying to
good
sleep
myself
yet.
today.
I don't know how long I can last, but I trying to see how long I can last.
Well, we can try to finish at least chapter 9. Wherever we stop, we will. Class will end, because I don't feel good either. But yeah. Because chapter 10 is going to be 2 classes. Because chapter 10 is much longer. Yeah.
Okay.
And then, like I say, with the assignment, I'm going to try to break it down, chapter 7, chapter 8, and chapter 9. Yeah,
So
and then
you said we were supposed to get an assignment
no,
for this
yeah,
week?
I didn't get it. Yeah.
Okay.
I see what I'll do. I'll just break down the different chapters and give assignments, because when y'all do, if y'all have to do a quiz, y'all have to go to BIF. So I'm not going to give any more quiz. I'll just give you all the assignments to complete.
Okay.
And then the review sheet. Yeah. For the quiz, for the final exam. And like I say, it will only be from chapter 6 to chapter 10.
Okay.
Yeah. So, well, I guess 2 more persons, or 3 more, because I know one person messaged me and said she won't be here tonight. Yeah. So either of you had a chance to talk about read risks.
Yes, ma'am.
Okay. So, Ms. Knowles, what do you think risk is? What is risk? Break it down for me.
Layman term is risk is for the bank lending me money and hoping and praying that I will pay them back in the time frame in which I agreed upon on their contract, whether it be by salary assignment or partial collateral. Now, the risk is I could lose my job and I'll be unable to pay back. And so that determines the higher
And
the
what type of risk we'd call that?
Credit risk,
Yeah. Because the bank
right?
is giving you credit. Yes, it's credit risk. The bank is giving you, extending credit to you. And like you say, in hopes that, okay, you will meet your commitment monthly until, say, they give you 25 years and you'll pay that mortgage for the next 25 years. Or if you get a consumer loan, they pray that if they give you 8 years, you will pay that consumer loan. And now, as we know with consumer loans, government salary deduction is the collateral. And like you say, what happens if you lose your job? What happens if you choose to do what many persons are doing today, leaving their jobs and going to Canada to live? Yeah. What happens? Miss Nan, did you have an opportunity to read chapter 9?
Good afternoon. Yes, I started to read it. I haven't read it in its entirety, but I got a overview on it, basically the topics and the different types of risk and what they involve.
Okay. Because as we know, it says, what is risk?
Yes, and I guess in this section,
we can have risk in any situation, like we talked about it before. Just going in your car is a risk. Something can happen. Going to your job, so yeah, risk can happen in most situations. You can have risks happening. Yeah. I think it's one more person. I think she's one more person. Yeah, one more person. So I guess we could go ahead. Yeah. So Ms. Knowles, you want to read for me what is risk? Hello. Hola. Miss Nan, you on?
Yes, I'm here.
Hello.
Hello.
Oh, sorry, I was reading and I was mute. I apologize.
Yeah.
What is risk? In broad terms, risk involves exposure to some type of danger and the possibility of loss or injury. In general, risk can apply to your physical health or job security. In finance and investing, risk often refers to chance and outcome of investment. Actual gains will differ from an expected outcome or return. Risk involves the possibility of losing some or all of your original investments. Quantifiable risk is usually assessed by considerable historical behaviors and outcomes. In finance, standard deviations is common matrix associated with risk. Standard deviation provides a measure of the volatility of a value in comparison to its historical average. Overall, it is possible and prudent to manage investing risk, which makes understanding risk very important. Learning the risks that can apply to different scenarios and some of the ways to manage them holistically will help all types of investors and business managers to avoid unnecessarily and costly losses. Continue?
Yes, please.
Types of risk. Credit risk. Credit risk refers to risk that a borrower may not repay a loan and that the lender may lose the principal of the loan or the interest associated with it. Credit risks arise because borrowers expect to use future cash flows to pay current debt. it's almost never possible to ensure that borrowers will definitely have the funds to repay their debts. Interest payments from the borrower or the issuer of the debt obligation are a lender's or investor's reward to assuming credit risk.
Okay, so we know we had in a scenario before where the bank got a customer's deposit and they gave the customer a rate of 1% on their deposit. And remember, they loaned John, say $300,000, but they loaned John $300,000 with a rate of 6%. So at that, the bank was able to had an advantage because they got 5% more on the mortgage loan than they was willing to pay Peter for his deposit. So, and as we know with credit risk, when we give a customer, when the bank give a customer a loan or any financial institutions, and because we have private financial institutions, we have Omni Flash Cash, we have Cash and Go, we have Auto H&L, we have Greenleaf, we have Easy Pay. All of these entities grant loans to customers. And unlike some institutions now, you have to be a partner with them to be able to get, your company have to be a partner with them to be able to get a loan. Say, for instance, if I want to go to a Omni Flash Cash for a loan, I have to my company have to be on their listing. So if my company is not on where I work, is not on their listing, I'm not able to get a loan at Omni. So say I work to a John Bull, or I work to ICS, or I work for government. Like I say, with anything, government is the one entity, one corporation that, public corporation that the government, that most lenders give money to, because they always feel like, oh, he or she works at government, my payment is secured, but it isn't. Gone are the days when it is that way, because nowadays a lot of persons now leave their jobs and go foreign, be it the US, be it Canada, because as we know, the situation with the nurses at the hospital, because they were getting higher pay and better benefits, a lot of them left government and went abroad to work. Do you think those persons who left government and went abroad to work, do you think they still service their loan? Ms. Knowles, do you have any situation at where you work at Commonwealth Bank where you find that persons is left and didn't service their loan?
Oh, yes, ma'am. We have plenty of them.
So what are you doing what is the bank doing?
Presently, what the bank is doing is reaching out to the family members and seeing if they can assist with the security, with the payments.
Is any luck?
Well, in some cases, yeah. But
so when these
not all.
persons, when the persons left, did they ever reach out to the bank and say, I'm leaving government and I'm moving to the US or Canada, and so I will service the loan in this way?
No.
Any of them ever made commitments?
A handful, but not all. And a very small amount.
What?
A very, very
and
small amount.
And then you say y'all have a lot of customers who's done that, and you have a very small amount who is honoring their commitment?
Yes, ma'am.
And these are persons who work for government or salary deduction workers?
Mostly government and, mostly government and believe it or not, bankers.
Bankers too?
Yes, ma'am.
But I thought y'all didn't give loan to bankers. I thought you have to have salary deduction. I thought you have to have salary deduction.
Yes, we do.
So how y'all, what does the bank, how do you get paid from the bankers?
They over the counter.
Y'all just start that again, eh?
Yeah.
Because I know at one point you call Commonwealth and say, I want a loan. Do you work for government? Can we get salary deduction? Other than that, you couldn't get a loan. Like I say, and then you have other companies. And so like I say, I wonder what is going to happen, because more than Commonwealth Bank, I sure a lot of other banks are having the same problem. So what is going to happen? These loans are going non-performing, 3 months, then inactive charge off, active charge off, and that's a deficit to the bank. And there's no hope to say that the person's gonna come back to actually service the loan. I don't think they will. So the bank has not reached out. So the family members who they reach out to, what is the family members are not contacting them and asking them to reach out to the bank?
What we're doing is we're reaching out to family members to see if we can get them to come in and at least pay something on the loan, whatever minimum it is. We presently, let me see, we just wrote off, I think it was last month. No, February, we wrote off 8.6 million in charge-off loans. And they were in the 120-day portfolio.
Whoa.
Yeah.
Whoa. So these are active. Are y'all gonna go behind the person? So y'all just write them off and they're gonna be inactive charge-offs?
No, so what had happened is we prepared thing up against judgments against them, because you know, if you put something in charge-off and they don't touch it for 7 years without you having had gone to the court to assess it, that means that they don't have to pay that.
Nope.
But if you take them to court or you have that registered in the court, you can go after them until you get your funds. So that's the stance that the bank is now taking.
Okay, all right,
the other thing is they're saying since the credit bureau will be coming here and it's here in a soft type of way.
It is, yes, it is.
So one of the things, and I've heard bankers say this, that the same thing that happens in the US, if you owe the US funds, you can't travel into their country. They're going to try to do liens like that. They're asking.
Okay, so persons who left here and want to come back, that's what will happen here.
That's what they're wanting to do. And I think that they will get it, you know.
Pardon me?
I think they will get it.
Like I say, and these loans that are given to these customers, they're not $2, because the bank now has expanded their lending practices. So they now, when they probably would only give you one little 30,000, now these banks and consumer loans going up to 80,000 and stuff. How is it that you're going to give a person $80,000 loan with no security other than government salary deduction? How is that? I never understood that when a bank didn't want to give a private sector person a loan for a consumer loan, because they're saying, oh, you don't have government salary, you can't get deduction, we can't give you a loan. But then you get deductions from these persons, and what happens? They leave and they go, and what happens? And I know they don't be no 30,000. A lot of those loans are in the $50,000 and $60,000. Am I right?
Yep.
Yeah, but like I say, credit risk is really it's really something that majority of financial institutions are really dealing with now. You also have credit risk when it comes to, sometimes we have the mom and pop shop. Before they would say, okay, now you can come and credit some grocery, And when you get paid, you could come and pay. So right there, that's a risk too, because you're not sure. You just have that little paper saying I come in to pay, or because I always got groceries from you and I always paid. But there comes a time that something happened and I, like you said before, you lose your job or you want shorter work shift. And so what happens, as the retailer, the shop owner, he is looking for you to come to pay. Oh, he'll pay at the end of the month, but something happened. You couldn't pay. Do you think these small businesses, when they allow persons to get credit, do you think they have any little binding contract or some note to say that I owe you, and if something happens, my family will pay or something like that? Do you think, or they just say, oh, I know you could come and pay? What do you think, Miss Nan?
I don't think they have
Hello?
any kind of contract or anything signed to say that my family will pay, or I think if the person doesn't pay, they just write off the bill and take the loss.
You think so? You think, okay, say for instance, you had a little shop, you retire, this is all you get your income from this, and then you give credit to certain persons, and then at the end of the day, they don't come to pay, and because you don't have any binding agreement, you think that's gonna sit well with you. You don't think you're gonna track them down and say, call them because you have a contact or you know where they live. You don't think you're gonna go behind them to try to see if you could recoup some of your funds, because say for instance, you retire, so this is your little income that you get. You think you won't try to track them down?
Yes, of course I would. But I mean, if they don't pay, then what do you do?
Well, that's why we say with anything, you make sure have some kind of little binding contract, some kind of a little agreement drawn up to say, okay, I give credit to Andrea Smith and she agrees to pay at this time. Sign. Another witness. So guess what? That's you could take that to court. You see? And so I think, like I said, a lot of times we just go by faith, word of mouth. Okay, yeah, you can come and pay. Just like we have friends who may say, I want to borrow. And you say, oh, that's my friend I know a long time ago. Yeah, and you lend, and first time lending, and then you said, okay, 3 months passed, now she hasn't paid. You have to go and ask, say, okay, you forgot you owe me. Some people, and that's why they say in friendship, don't involve money, because a lot of people don't pay you back. So in friendship, don't involve money. But like I said, with credit risk, credit risk is something that most banks and, like I say, financial institution has to deal with credit risk. It's there, and that's good that the credit bureau is coming. And like Ms. Knowles say, it's a soft run, but a lot of people still saying it ain't coming to provision, because if it does, a lot of banks are gonna lose, because they depend on getting these new loans, and then when the credit bureau come into full swing, what is going to happen? What it has here, my credit score. My credit score is excellent, very good, average, poor. I go to Mr. The credit bureau is going to deal. They're going to look at your BPL bill. They're going to look at your cable bill. They're going to look at your water bill. They're going to look at all these different bills and say, oh, she's to miss that water bill payment. She has to pay on time. So something is going to tarnish your credit rating. Like I know someone told me that they got private financing. They went and they got private financing, and what the company did, the company asked them whether they you can mute for me, Miss No. Ask them so were you paying your BPL, were you paying your light bill on time, were you paying this on time? And they actually check with the companies to ensure that their bills are being paid on time. And this isn't going through a bank now. This is going through a private financer. So even private financiers is on board with the credit scores, even though they don't require that for you to get private financing for a mortgage or for a car. They still do a check as to whether you've been paying your debts on time. So I think when the credit bureau come into play, a lot of persons are gonna be a lot of middle class and low class earners. It's gonna be at the end where we're gonna see a lot of issues happening because people will no longer be able to jump from bank to bank to bank to bank and say, okay, I'm tired of this bank. I'm going to get another loan at another bank. And so it won't be as easy as that anymore. So I think the banks, the financial institutions as a whole will take a beating when the credit bureau comes into swing.
Miss
Yeah.
Smith?
Mm-hmm.
So Royal has already started using the credit bureau.
Uh-huh.
And I feel as though it has already been affecting us. I feel as though Royal is the only bank who's actively using it.
Uh-huh.
And because it's now being launched, it isn't really accurate. Like some of its reporting is wrong.
What?
And so sometimes it works to the client's disadvantage, whereas it's showing they have facilities that they don't have. And in order for us to even try to proceed to help them, they have to launch a dispute with the company that's responsible for recording this information. And we have to wait till they get back to us in order for us to proceed. Yeah.
So you tried to tell me the soft opening of this credit bureau, they making these little mistakes.
Yeah, but then can I tell you it working at some person's advantage because
What?
it isn't reporting certain things for them as well. Like if
Whoa.
when we run certain people name, it'll show they don't have any facility. But I know that First Caribbean and Fidelity and BOB isn't on board as yet. That information isn't in the bureau as yet. But yeah, Royal Bank, we are now mandated to use this credit bureau in order for us to help any client.
Whoa. Oh, that's good to know. But like you say, some banks are not on board as yet. Well, like I say, like you just said, it's some customers is to their advantage and some customers is to their disadvantage. So y'all can't do nothing to help them until this I guess who's doing the person that they outsource this service to, until they go back and when the person file a dispute, until they come back to you. Whoa. And this is a soft run.
Okay.
Yeah, this is soft run. Yep.
Gee. And this is happening on a soft run. Well, I hope they have a long soft run, because if these little glitches happening, they need a long soft run. They don't need, and see, that's what happens in our country, we don't do things for a while before we jump in and say, okay, this is what we're doing now. We don't like you do a soft run for a while before we get and say, okay, we've ironed out all the kinks. Okay, this is running more smoothly. Okay, we had an issue with this. Like you say, some persons don't have no facilities with a certain bank, but the report is reporting that they do. So until they iron out all those little kinks, they need to continue with that soft run and try to get as much banks, financial institutions on board. So once they get more financial institutions on board, then they will really be able to see how the platform look. But if they just can take up just Royal Bank and who else?
Well, I know Royal Bank, Commonwealth Bank, and Scotia Bank information is in there.
Right. So I'm saying it was only these three banks, right? And we know Commonwealth, yes, Commonwealth is out there. Yes, they're in the competition. I know Scotia and Royal may be out there, but they more, I know Scotia they doing the loan stuff, and I think Royal too, but the bottom line about it is all banks need to be on board so they really can see if this platform is actually working. All
Right,
banks need to be on board.
but what I don't agree with is there's a $24 charge that the client has to pay. So I paying this $24 charge for you to run this report and for you to come back and tell me I have this facility that I really don't have. I don't think
So
that's fair.
right, so what happens when I come back to you and you come and you say, hey, you didn't tell us with this loan you had a bank in the Bahamas, but I'm like, me, I might have had a loan there, but that's paid off. So do I have to pay to file that dispute too?
No, the dispute is there isn't a fee for the dispute.
Oh, okay. Gee,
Yeah.
I have to pay for somebody to lie on my name.
Yeah.
It is just like over in the States where persons clone your name and get loans and stuff. So
Yeah.
the bank has, it's still, like I said, it's a soft opening.
Gee. Well, I think with the soft opening, with the credit bureau, all banks all financial institutions need to be on board. So what is going to happen? Yes, I understand with the soft opening, with the credit bureau on the whole, what all entities like will the little companies that like Omni Flash Cash, Cash and Go, Easy Pay, Greenleaf, Auto H&L, will they be a part of the credit bureau? Because they are giving monies, they're lending monies to consumers. Will they be a part of the credit bureau?
Well, they were invited to be a part of the credit bureau. I don't know if they accept it, but it'll be all of them, down to Furniture Plus and all.
Right, it has to be all of them because this is the only way the credit bureau will work. Because if y'all excluding them, you know how much people just go to, like you say, Furniture Plus? How much people go there to get furniture? How much people just go to Auto
I think we
H&L?
should, that will be an introduction for McKay, yes. So she can see just how fast things move, so she can have an appreciation for it.
Well, anyway, like I say, Auto H&L, you can, Miss Knowles, you could mute, we could hear you.
Sorry.
Yeah, but Auto H&L, what is going to happen? You can go to them and get $10,000. Then I know I remember the last time I saw you can go to Easy Pay and get 15. Someone say you can get 20 now. So if someone has all these different loans, how will you be able to say the credit bureau is running effectively if these different entities don't jump on board with the credit bureau? You can't. It will be inaccurate.
Yeah.
And like you already said, Ms. Nan, that with the soft run, you have persons who don't owe a Scotiabank, but you have Medana's owing Scotiabank. So, like I say, they need to have the soft run for a very long time. Because like with anything, and especially when it have to do with government dealing with stuff, it's like always so much issues because they don't do their due diligence by saying, these are the issues, let's work them out first before we go fully to the public. They don't do that. They don't have these issues. And you'll see couple months and be like, oh, we launching the credit. How you can launch a credit bureau and y'all have a lot of stuff to iron out?
Agreed.
And because of the stuff they have to iron out, what is going to happen at the end of the day? All kind of things could be mixed up. People
Agreed.
who didn't owe this bank, you're gonna have this report saying I owe the bank. People who pay their BPL bill on time, you can have I paid on time. No, you know. So, like I said, with everything, government just run full speed ahead and not sit down and say, let's think about this first. Let's do it like they do in the software, but let's do it where we involve one bank instead of 3 different banks. Involve one bank and start with that bank and say, okay, let's do the software. But they don't do that. And they don't have to do the software with another bank. They could do the soft run just by doing the different BPL, water and sewage, different companies like that. And so you're not tarnishing anybody's reputation by going to another bank who coming to you and getting information saying I owe Scotia when I don't. But we know everybody have a BPL bill. Most people have water and sewage, cable bill. So you start from there.
Right.
And then you do, and that's where you could do your soft run and you don't have to worry about nobody coming back to you and saying, what you talking about? I pay my bill on time. Sweetie, your name is Andrea Smith. Only you, and you live Avocado Road, okay? This your BPL bill. You always late. You can't run from that, and that's why I think they have to actually really think when they're talking about the credit bureau, because I think that was just thrown together. As long as they were talking about it, they still don't have it together. And they'll still bring it to the public, even though they don't have it together.
And Ms. Smith, I know for sure Scotiabank is going to have a problem with that, because what is happening is we know, like when we sell a large portfolio of loans, right? To a company, we sell them at a discount. Customers are actually going into the third party, whoever they sell them to, and paying it off. When they get calls from them, they say, okay, you pay us half of the money and we write off the whole bill, right? They're making these agreements, but in our system, it's showing the customer is non-accrual or the customer is delinquent when they have already sold these loan portfolios. So now if they enter in the information that's in our system,
it's going to be wrong.
Yes, and then it's going to say, okay, well, you didn't pay off this loan. And the customer is going to be like, I paid off this loan years ago. So I know for sure it's going to be a problem.
Whew. Yeah, because I know with Scotia sell a lot of their loans. They sold a lot to Gateway, to Frankie Wilson, and another company. So they sold a lot of their loans. So, and like you say, some persons stay because the loans are sold at a discount. So when the customer go to the whatever company and the company give them a discount, they could pay it off. They pay the loan off. But like you say, if a Fidelity Bank calls or this report that they generate, it'll show that, hey, I still owe Scotia. My loan is non-accrual. So that's why I say they have to work out the kinks before they actually say this thing is on stream. And as I say, they have a long time with the soft run. They don't need. That's why the soft run should have been using a BPL, a water and sewage, a cable Bahamas, because we know those bills are in your name. And we can't get it wrong to say that, oh, you ain't paid for 2 years or 3 years, because little local residential persons, if you don't pay for that long, you light off, so they should have do the soft run that way. But that's why I don't think they're going to capture those companies that I just talked about, like Auto H&L, Greenleaf, Easy Pay, these other Omni Flash Cash and Go, all these other, and then they have other financial little financial institutions or little financial places that give loans also. So how are they going to go about doing this due diligence to ensure that they capture? They will never do that. They will not capture everybody's debt. And like I think Miss Nan say that some people have the advantage. It works to their advantage, and some people it works to their disadvantage. Because I get one big mortgage with Finco, but because how the report was generated by the company or by the credit bureau, it doesn't show I have this big loan. So guess what? I have a good credit, but my credit could be poor because my loan could be 2 months behind, or I keep falling 1 month behind. But because it didn't take it into consideration, the report didn't take it into consideration, I win. So yes, it works for some people, and then it's an advantage for some people, and it's a disadvantage for some people. So like I say, all we can do is hope and pray that they do get the credit bureau running the way it should. And I wonder if they had persons go off train and really did due diligence with training with regards to the credit bureau. I really wonder if we really did, or how that came up. I think it's just a lot of times training in our country, we lack it a lot, especially when it comes to anything the government have to deal with. It's just like, it's lacking. Training is lacking. And we know any one of us who have experience with government entities, you know, for example, a national insurance, you know, example, a national insurance. So national insurance, some people died and they were still, and their checks were still being done. So it's just that we don't have proper due diligence when it comes to ensuring things are in order. And like I say, the Auditor General can only do so much because he has a team and they can only do so much. And I just think in all organization, in government, they should have an audit department that auditing the actual department. And so when the Auditor General comes in, only thing the Auditor General is doing is reviewing what the internal auditor says, and then doing their own reports on their own from what they gather. But at least if they have an internal audit department, it'll capture some of the stuff, not waiting for the Auditor General to capture it. Like I say, look at what they're talking about now, but parks and beaches and parks, you know, it's like government entities, the risk is really high in government entities. Yeah, because we know that some people with government salary deduction, they tell you could only have a certain amount coming out of your salary. And some people, because they know somebody in HR, it's so much more coming out of their salary. So who is monitoring that person? Nobody is. So that's why the risk is always there, especially when it comes to government salary deduction. Hold on 1 second for me. Okay, sorry about that. Anybody else had anything to add regarding this new credit bureau and the hiccups?
Boy, this can be rough. That's all I gotta say. Rough. Because we were looking at it, and as the securities person at our bank, and they did the training, I was, it ain't making no sense.
No?
No, because a lot of our customers say, oh, I don't have a light bill in my name, or I live home with my parents, and a lot of persons are now renting places where light, water, and everything is included. So therefore, yeah.
Whoa.
So, and a lot of young people don't have anything in their names.
Agreed. Yeah, agreed.
So you're not getting a true picture of.
That's what I say. So how can it work?
When you figure it out, you let me know.
It can't work because, like you say, like Miss Nance say, that you know, from the few persons that I guess did the soft run, persons are saying they coming up on the report that they have facilities with another company when they don't. So now they have to pay $24 for this process, and then they have to find out that this process have them owing somebody, which they don't. So now they got to go file a dispute, and the bank can't do nothing until the dispute is cleared, to say that, okay, yeah, they receive a letter from that company to say that Andrea don't have a loan with Bank of the Bahamas. So here again, that's a long process all over again. So, and like you say, some people don't have utilities in their names. So what is going to happen? How do you actually account? You can't.
And one more thing that I experienced that I really don't agree with. Okay, so let's just say the report would say Natanya Nairn have a loan for $20,000 with bank number 002, right?
So you
So
have to
let's
know
just
if
say
that's bank.
let's just say today
Mhm.
Royal Bank is bank 002. But then when I
Right.
run the report tomorrow, Commonwealth Bank showing a no 002. So the report don't even tell you like which institution it is. So you have to call the client and be like, okay, you sure you don't have nothing with any other bank because it's showing up that you have a loan. So the client's like, with what institution? And I'm not able to say it because the report doesn't provide that. I feel as though the report should say that.
Yes. Why is the report just gonna say 00? I think in my business of banking class last night we were talking about something like that, and the guy was saying on the actual, because we were talking about checks and check clearing, and he was saying sometimes instead the check has 002, and I know 002 to be Scotiabank, and then again I'd see another check come with 003 and it's saying Scotia. It's like I say, I don't know how we're gonna sort out all this issue when it comes to the credit bureau. That's why they say the credit bureau ain't coming on. We get our soft run. They tell you the credit bureau ain't coming into full effect right now. They say that. A lot of people say that it's not coming into full effect right now. Credit risk. When the lender offer borrowers mortgages, credit cards, or other types of loans, there is always an element of risk. The borrower may not repay the loan. Similarly, if a company offers credit to a client, there's a risk that the client may not pay their invoices. Credit risk also describes the risk that a bond issuer may fail to make payment when request or that an insurance company won't be able to make a claim. And we know that's a risk too, because like with anything, if you purchase shares, if you purchase bonds, like they say, you purchase government bonds, something happened, so you weren't able to pay your dividends or your return on those government bonds. That's a risk. So anything we do when it comes to investment, it could be a risk. And like I always say, if you want a higher return, you have to take a whole lot of risk. If you're just not worried about returns, then you can take that fixed rate risk. So you know my rate fixed. I ain't got to worry about no risk there. I may not get as much interest or return on my investment as you do, but I'm not having any risk, because if I invest a certain amount of money and then when I look, okay, because I invested in this stock or this bonds, what happens? That the market crash, and what happens? That money what I invested, it all declined. And so, like we know with the credit crisis, the credit crunch, when we had 9/11, what happened to a lot of people? They went to bed rich and woke up poor because the market crashed, the 9/11, everything went kaput. So a lot of people lost a lot of money, lost a lot of investment. So like they say with investment, even with insurance companies, look at us. A lot of times we pay our insurance, right? We pay it up, pay it up, pay it up. And what happens at the end of the day? When time for you to get your money, if you hadn't read the fine prints, they say, oh, but look at this fine print. It said that only if this happened, you're able to get funds. Like I think Miss Burrows talked about it when it came to insurance with her vehicle. She said that, she thought once the car got hit, okay, I could just claim, but it said the car had to be totally damaged for her to be able to get any compensation. So like I said, with anything, risk is there. Credit card, when you get a credit card, what happens there? persons could run that credit card right up and you got to run behind them to get the money. And then you have credit card risk where you have other persons just use your card and you weren't responsible for it, but you went to a restaurant, person sit down, get all your code and you pick everything off it, get your code from the back, your name, everything. And so they go online and they just start purchasing and purchasing and purchasing. And so that's why I'm so happy now with the bank that I deal with. I don't know if other institutions does the same thing, but you have the CV code, which the CV V key that you have every time you purchase something, you have to actually, it automatically gives you a different CV code for the back. You don't never, like how before you'd have one code written on the back of the credit card or the debit card. The institution that I deal with, that don't happen anymore. So if I'm paying a light bill, I have to ensure that I got the code, the CV code for the back before I attempt to pay the light bill, because it's going to ask, and if I put in the code from the back of the card, it'll say payment declined. So that is a good option with regards to the credit card, because it's hard for somebody to actually use their card to make purchase on it. I don't know if other banks have the same feature, Miss Knowles, Miss Nan, does Scotia have that feature?
Miss
Commonwealth
Cartwright,
Bank, no.
Scotia, but
Oh,
no,
Cartwright.
yeah, no, Scotia don't have that feature, but I also bank with that bank you bank with, and I think that is awesome.
Yep, because
Which bank is
Sometimes
that?
I even Fidelity. Sometimes I even forget, and then it's be like decline, and I be like, oh shoot, I just remember I have to get those.
the code.
Yeah.
Yeah, so I like it because, like I say, I had the bad experience where somebody in Europe was using my debit card. So that's why I told my class last night I don't have a debit card. I have a debit card, but I don't use it. I have a prepaid Visa, which is just like a debit card, but other than that, I have to load my funds and I get rewards from my prepaid card. So I don't use the debit card like that. I use my prepaid Visa. That's what I use. Yeah.
You have your prepaid Visa with?
Fidelity.
Oh, I must be need to go there. Let me check them out.
Yeah, you get a prepaid Visa where I tell people I every 3 months I look forward to looking at my statement because I pay my BPL, my life insurance, my health insurance, my water and sewage, my shopping. Everything I do, I pay it with that prepaid Visa because that's my money. It ain't like I'm using the people credit card. That's my money. If I put it on the debit card, I wasn't going to get points. So I use the prepaid Visa because if something happened and my card is compromised, I am assured that Visa will pay me and they will do the investigation on the back end. But when I use my debit card, somebody had used my debit card, like almost 600 plus. I could not get my money back until almost 4 months because they had to do the investigation. So from then, I don't use the debit card. I use the prepaid Visa to do all my transactions. So I'm getting points at the end of each quarter. I look at my points. I can buy anything I want. I know the last time I had over $700. So I was able to buy stuff for my granddaughter, do some stuff, and right from my points. So I use my prepaid Visa to pay everything that I do. Everything, my water, my life insurance, my health insurance, everything, cable, all. I use my prepaid Visa to do it.
Well, Scotia has customer service stuff because someone used my card and this is now almost a month and no one yet reached out to me.
Yeah, but I tell you, mine took, I had to wait for a very long time to get answer back. They told me it could take up to 6 months.
My card was in the credit at $460. And because the person used almost $2,000, they're expecting me to pay that, pay the minimum payment. I said, but I'm being assessed fees. I said, come on. And they told me it's going to take 3 to 4 weeks because all of the stuff was going to one place. And it was saying that I was in, where that was. Africa, Dubai, or something like that. I don't know.
Whoa.
Yeah.
Yes,
Sorry,
like I said to my class last night, technology is good, but technology, the same way we go to work and do our job, the criminals do the same thing. They're good at what they do. Yeah. Credit risks are calculated based on the borrower's overall ability to repay. To assess credit risk on a customer loan, lender look at the 5 C's: an application credit history, its capacity to repay, its capital, the loan's condition, and associated with the collateral. And like I say here again, collateral, I remember back in the days when I worked in the bank, you couldn't get a loan like how you can get loans now, government loans, and so much. You got a certain amount, and your salary went to that bank. And I don't even think it was saying that government's your salary deduction. Your salary had to be going to that bank, and so it was easy for you to get the loan. But like I say, for now, it's as long as your government salary deduction, they can get government salary deduction. It's okay. They don't even look at that, that collaterals as such. For them, collateral is that little paper, just say I work for government and the bank is going to get salary deductions. And like I say, a lot of banks make a whole lot of money from government salary deduction, government workers at the end of every month. So you can imagine how much money goes to a lot of these banks who have so much government staff having loans with them. Some banks get over $3 and $4 million a month in payment for loans, Ms. Cartwright, can you read liquidity risk for me, please? Hello, Ms. Cartwright.
Hi, sorry. You can repeat that for me?
Can you read liquidity risk for me, please?
Okay.
Liquidity and market risk for me, please.
Okay. Liquidity risk involves securities and assets that can be purchased or sold fast enough to cut losses in a volatile market. Assets-backed risk is the risk that assets-backed securities may become volatile if the underlying securities also change in value. The risks under assets-backed risk include prepayment risk and interest rate risk. Changing in prices because of market differences, political changes, natural calamities, diplomatic changes, or economic conflicts may cause volatile foreign investment conditions that may expose businesses and individuals to a foreign investment risk. Equity covers the risks involved in a volatile price changes of shares of stock. Investors holding foreign currencies are exposed to currency risk because different factors such as interest rate changes and monetary policy changes can alter the value of the asset that investors are holding. Market risk. Market risk is the possibility for an investor to experience losses due to factors that affect the overall performance of the financial markets in which he is involved. Market risk, also called systematic risk, cannot be eliminated through diversification, though it can be hedged against. Sources of market risk include recessions, political turmoil, and changes in interest rate, natural disasters, and terrorist attack.
Right. Okay, thanks, Ms. Cartwright. Like we know, when they talk about the market risk, as we know, when recession happens, what happens in the market? Inflation. All sorts of things happens in the market. when political changes, like we just had an election, what happens? A lot of changes. So persons who were working for the former governing party and they were on contract, a lot of them, what happened to them? They have no job. So when government changes, when disaster happens, same thing like with Hurricane Dorian, what happens? A lot of people are displaced. So the market is in disaster mode. So these are the factors that contribute or detailed from market risks. Then we have operational risks. We know operational risk summarizes the risk of a company undertakes when it attempts to operate within a given field or industry. Operational risk is a risk not inherent in a financial systemic or a market-wide risk. It is a risk remaining after determining financing and systemic risk, and includes risks resulting from breakdowns in internal procedures and policies and systems. What Ms. Knowles, when they say operational risk, and what do you align operational risk with in your organization?
Okay, operational risk for me, it's, for instance, Joseph comes into the bank to get a loan, and you have to make sure that whatever facilities he has, you clear his application to make sure that all of the facilities he have is taken care of, his overdraft, his credit cards, and his present loan. But when one of those are left off, he's not getting a true picture of his debt service. So you can issue this loan, but guess what happened? You left off his overdraft, you left off his credit card. So when he brings in his deductions, something is going to be short. So that's actually human error.
Right. And so we know with human error, and operational risk really comes into play in any institution when policies and procedures are not being adhered to. And if the policy and the procedures that, when, like you were saying, when a customer comes in to pay off a loan, you ensure that XYZ is done, this is done, that is done before you can say to the customer, your transaction is completed. So a human error. And so human error, clerical errors, they all amount in operational risk. And so operational risk can make or break a company too, because if you make an error, like say in operational risk, you make an error by doing a draft, say you debit the customer account for $500, but then you did the draft for say $900, and person signing the check and signing the entry, looking at the instruction, did not pay attention. What happens? And they sign, the customer walks away with this $900 check, and his account is only debited $500. That's a breakdown. That's a human error. That's an operational risk. Operational risk can be summarized as a human risk, like we said, human. Is the risk of a business operation failing due to a human error? We talked about that. It changes from industry to industry, and it's important. It is an important consideration to make when looking at potential investment decision. Industries with low human interaction are likely to have lower operational risk. So they say when human beings don't have to really be involved, I guess the operational risk is lower. Operational risks focus on how things are accomplished within an organization and not necessarily what is produced or inherent within an industry. These risks are often associated with active decisions relating to how the organization functions and what it prioritizes. While the risks are not guaranteed to result in failures, lower production or higher overall costs They are seen as a high or low depending on various internal management decisions. So we know operational risk is the way a company runs their business. Like I say, for most, there's some companies who are stickler for policies and procedures. There are some companies who, well, I know Peter, so I can let him slide. So, and that's why they say, as long as human is involved, there's chances that you will have errors, you will have risks. Then we talked about reputational risk. We know with anything, reputational risk is one of a risk that can break a company or make a company. Because like, for instance, I say, okay, I bank at Fidelity. I was just telling you all about the service that they offer, and I am happy with their credit card or their debit card. When I'm doing purchases, I don't use the same CV code, so it's less chances somebody can actually hack my card. So me and Miss Cartwright was saying that to y'all. So that, like Miss Knowles says, she has to check into it. So I am actually selling that product, or giving a good feedback on that product. So I am actually building up their reputation. Then on the other hand, it could be where I simply say, oh, I bank at that Fidelity, man, that line always long. You can spend your whole lunch hour in there. Or I make this deposit, and every time I go in there, money missing off my account, and nobody could account for it. I've been waiting for 3 months, and I've not heard back from them as yet, just like Ms. Knowles said about Scotiabank. So reputational risk can make or break a company. Reputational risk is a threat or danger to a good name. Yeah, people, reputational risk, they could use your name and they could say, oh, Andrea, she's this and she's that. Mind you, they're slandering my name. Know me not, but they're slandering my name and don't even know me. So is my reputation. A good name or business, a good name or standing of a business or entity. Reputational risk can occur through a number of ways: directly as a result of an action of the company itself, indirectly due to the action of an employee, or tangibly through other perpetual parties, such as a joint venture partner or supply. Yeah, say for instance, I have a business with Miss Knowles. Miss Knowles did some stuff personally, but because I am, and she is being sued personally, but because she is in business with me and we have a company together, what is going to happen to our company reputation? They're gonna look at what Miss Knowles being sued. So guess what? And she's a part of a company with Miss Smith. Oh, I need to move my money from there. I ain't doing business with them no more. Says a law firm. And as we know, a lot of where we see a lot of this reputational risk happen, we have a lot of lawyers who they work for a company. Clients place money in their hands. The money is supposed to be placed in escrow, and when the deal is done, then the lawyer is supposed to ensure that the funds that are in escrow is sent to, say I'm purchasing a piece of property, and my lawyer is holding funds in escrow for me. So when the transaction, the deal and everything is finished and approved, my lawyer is supposed to be able to send the money in escrow to the seller. But what happens? Come to find out, the lawyer spent my money. What happens? We end up in court. The company ends up with a bad reputation because this lawyer represents your company. So reputational risk could be in any form, and like I say, with a joint venture, it could be two partners, and one partner is being sued for personal reasons, something totally not connected to the business. But when persons see that, they're gonna not be comfortable, so they're gonna If they're doing business with you, they're gonna stop doing business because of one particular partner. Other type of risk is legal risk. This risk that changes in law advertently affects banks' performance stability. A legal case of appeal could make some contracts void and the bank may be unsecured. Banks can be sued, a factor that can highlight poor banking practice. And like I say, with anything, if banks, any organization, if they don't have strong policies and procedures in place for the staff to follow and ensure that these policies are adhered to, it'll always be an issue. And when it comes to legal risk, that can happen because if staff not doing what they have to do, doing their due diligence, paying out money and not following proper policies and procedures set out in the operation credit manual, then it could create an issue for a company. Investment risk can be defined as a probability or likelihood of an occurrence of loss related to the expected returns or any particular investment. And like we know, if we invest money, we invest in a mutual fund and it's paying a high return, we know we're taking risks. So we want higher returns, so we have to take a higher risk. And so in investment, you can, this month you can bump up, next month you can go down. So, you know, your returns can be high one month and the next month you can see a negative return for you, or dividends, you don't get any dividends, or you just see a negative return, or because the share you bought, it dropped and it doesn't value the same. Like I have a company, I have Fidelity shares. When Fidelity first started with shares, their shares was worth $2.37. And a lot of persons had the shares, a lot of people sold their shares, but persons who kept their share, Fidelity share, one share now is worth $15. So some shares appreciate, some shares just stand still and don't appreciate, you know, they decline. I remember they had the First Caribbean was way up there, and they had Commonwealth Bank, and I know Commonwealth Bank had a stock split. And so I haven't seen the shares climb as high as it used to be. Ms. Knowles, any reason for that? How come y'all shares ain't climbing as high as it used to be? I remember before y'all had the stock split, the shares were really high.
We trying to figure that out too.
Yeah, because I remember
before my stocks now.
Because I remember before the stock split, I was like, whoa, I need some of that Commonwealth Bank shares. And then after the stock split, it just seems not to appreciate as fast as I thought it would have.
They doing something, somebody on the top getting all the money.
You think so?
Yes, ma'am.
Because like I say, whoa, when I look, because I always look at it and I say, whoa, after that stock split, it's just that the shares is not appreciate like I think consumers expected it to, shareholders expected it to. It hasn't. Yeah. Interest risk rate. Interest risk rate is the possibility that a fixed rate debit instrument will decline in the value as a result of the raise in interest rate. When investors buy securities that offers a fixed rate of returns, they are exposing themselves to interest rate risk. And like we know, interest rate risk can, and that's why when banks say, okay, if you switch your mortgage, this is what your rate would be. And, you know, people don't read the fine print to say, oh, this your rate for a couple of years. And after that, your rate could go back up. Your interest rate could go back, go to 8%. Or if you default or you make 2 payments or 3 payments, your interest rate will go to what the original rate would have been when you got the loan because you default and you didn't make 2 payments. People don't read the fine prints and things like that happen. So interest rate risk, and like we know, like I told you all about the LIBOR situation, the LIBOR rate situation where because there was some tapping, some fraudulent act done by two brokers, and they tap into the LIBOR rate, and they changed the rate, and so the LIBOR rate was lower, which allowed a lot of homeowners to be able to purchase homes because the LIBOR rate was low. But when the situation was uncovered, the LIBOR rate had to be changed and it had to be corrected. So at that point, a lot of persons who might have gotten a mortgage for 2%, when they actually uncovered the scam, person mortgage rate went up to 10%. So imagine you're paying a mortgage payment for a 2% interest rate, and then on a $600,000 mortgage, and then several years later, a scheme is uncovered, and you now have to pay 10%. Your rate is 10%, so you know your mortgage payment is out the door. So a lot of persons lose their homes at that time. Business risk and systemic risk. This risk is associated with a specific issue of a security. Business risk refers to the possibility that the issuer of the stock or the bonds may be bankrupt or be unable to pay the interest or the principal. Common way to avoid unsystemic risk is diversify. So, like I say, there are several different types of risks, and like with anything, business risks, we take a chance when we start a business. We take a chance when we invest in a business with as a partner or just as a shareholder, or or purchase shares in a business. And like I say, if you look, I remember Benchmark, their shares seem to start to grow. If you look at a Kalina had dropped, and then now it's at $7 and something, and I was about to sell my Kalina shares. I say, the shares ain't growing nothing. Bank of the Bahamas seems to start to grow too. So, yeah. So like I said, with anything, investment, any businesses, there's risks. Miss Knowles, can you read other type of risks for me, please? Not Colette, not you, the other Knowles.
Sorry.
Bo Knowles. I think she's here.
What page is that?
That's page, well, my book say 125, X, the insert is 250. I don't know your
Yeah,
book.
250.
Yeah, I have an old book. Okay, all right.
My book has 127.
Okay. Other type of risk?
Liquidity risk.
Taxable. No, we passed that. Taxable risk.
Taxable risk.
Uh-huh.
The risk that, turn that off, please. The risk that a security that was insured, a risk that a security that was issued with tax exempt status could potentially lose that status prior to maturity. All risks. All risk is specific to bond issuers and refers to the possibility that debt security will be called prior to maturity. Continue.
Yes, please.
Inflationary risk. Purchasing power risk. The chance that the value of an asset or income will be eroded as inflation shrinks the value of the country's currency. It is the risk that further inflation will cause the purchasing power of cash flow from the investment to decline.
You could just finish reading other type of risks, and someone else will take over the other section.
Okay.
Social and political.
Social, political, and legislative risk.
Risk associated with the possibility of nationalization, unfavorable government action, or social changes resulting in a loss of value is called social or political risk to change laws. Affecting security is any ruling that results in adverse consequences is also known as legislative risk. Currency exchange risk. Currency exchange rate risk. A form of risk that arises from the change in price of one currency against another. The constant fluctuations of in the foreign currency in which the investment is um, denom- denominated vice what?
Vice
It's a
versa.
vice versa. One's home currency may add risk to the value of a security.
The last
Re-
week, Mhm.
Reinvestment risk. This that failing risk that fall risk. Jesus Christ. Risk
You
that
need glasses. Eh?
okay. My glasses in the car. Risk that falling interest rates will lead to a decline in cash flow from an investment when its principal and interest payments are reinvested at lower rates. Master the 5 C's
Thank
of
you.
credit.
No,
Mastering
thank
the
you.
five.
Thank you, Miss Mo.
Oh,
No,
sorry.
thank you. Thank you. Okay, so now we see all these different type of risks, and every risk have its consequences, and it has an effect on something. So
Oh no,
now
we going through this
Mhm,
right now.
mhm.
The inflationary risk,
Inflation, yeah. Mhm,
right,
mhm.
and the social and political risk.
Yeah. Mhm. And like we know, every when we listen to them speak in the house, they were talking about this the budget and how the tax cut from 12 to 10%, how much money the government make, but still a lot of persons are hurting from inflationary risk. And then Miss Ellis in the Senate, she was talking about how Barbados and Turks and Caicos, they adjusted their they I guess they said they won't put taxes on certain items for 6 months, or they taxes for 3 months. And so she was saying, how come we as the Bahamas hasn't followed suit, but she said, like, because like with us, before, when it was 12%, persons didn't pay taxes on medications and stuff. Now everything is VAT, everything is 10%, everything is 10%. And like I say, when you go to the gas pump, you say, okay, give me $20. Gee, did the needle move? It didn't. So I don't know what's going to happen, because every time you go into the food store, the prices just changes every day. I remember when you could have get a iceberg lettuce for dollar something. You better be taking your chance if you find an iceberg lettuce nowadays. Just be like, well, Jesus, why this lettuce cost so much? This lettuce costs so much. But and you go, you look at this the sweet pepper, you look at the broccoli, you look at the cauliflower. It's like, and that's why they say we are fat, but we can't, a lot of people can't eat healthy because to buy vegetables is very expensive. So what can we buy? And even now buying the tuna and buying the corned beef, that expensive. So, that's why we just continue to eat. A lot of people just continue to eat unhealthy. Anybody have any concerns, any input to add to the different type of risks that we just went over? Oh, I just want to finish this chapter because, boy, I'm not feeling well today. Yeah. Master the 5 C's of credit. Mastering the 5 C's of credit requires integrity, work experience, in your industry and cash flow to support loan payments. The 5 C's or characteristic of credit, character, capacity, capital, condition, and collateral are a framework used by many traditional lenders to evaluate potential small business borrowers. The 5 C's of credit: character, capacity, cash flow, capital, conditions, and collateral. Miss Knowles, Colette, do y'all use these 5 C's at Commonwealth Bank?
Yeah, the credit officers do.
Okay. What area you work in?
Credit.
Okay. There aren't any strict guidelines for how lenders weigh these attributes. Different lenders may place more value on one over the other. For example, online lenders may be more willing to consider a borrower's personal credit score on a loan application, while banks may care more about collaterals and money you have invested in the business. The key to small business success is focusing on things you can control. Say by Brad Faris, a business growth advisor with Anchored Adversary in Chicago. The 5 C's are one of those things that just are. Banks believe in them. So we have to deal with it, he says. We rounded up the 5 characteristics and some tips for putting your best foot forward. Mastering the five C's of credit. Character: what is a lender's opinion of a borrower's general trustworthiness, credibility, and personality? What it matters: banks want to lend to people who are responsible and keep commitments. Do you think a lot of times, yes, banks want to lend to persons who are responsible and keep commitments? Do you think with COVID, any bank saw committed, responsible clients not being able to pay their loan?
Yes, a lot.
A whole lot.
Right. And so even though we use that as our mark for giving customers a loan, anything can happen. And you can have, like I say, a customer who was a good payer, never miss a loan. But what happened? COVID. What happened? Dorian. So that is the reason why a lot of times people say, oh, a loan officer can actually tell when a person will now be non-performing. Because the first month you say, okay, and then the second month you say, okay, time to put this person on the wish list. And so you put them on the wish list as somebody who is borderline going non-performing. So after that, 3 months, you look at it and you see they actually hit 3 months, they didn't come in, 4 months, 5 months, so they're actually non-performing. But not in all cases that the character, what it is, why it matters. Really, we can actually truly say and absolutely say that this can determine the type of customer that we get. Because, like I say, we can have natural disaster, which was Dorian. COVID was a natural disaster too, because how many people lost their jobs? How many people still not working? How many people who had jobs making $80,000 and $90,000 a year had to stand on national insurance line and get a check for what, $200-$300 a time? So, like I say, things happen, and yes, I don't think no more when we say we could use these as guidelines to determine whether a customer will pay their commitment. No longer it's that, because in the climate that we live in now, things happen and you don't have any control. Sickness happen, you have no control over it. How is it assessed? From your work experience, credit history, credentials, reference reputation, interaction with the lenders, how to master it. Character is something you can control and promote, but only if you have a bank that cares about relationship. Here again, how many banks care about relationships in our country, around the world? How many banks you know care about a relationship?
They say they do.
Mhm.
They just, the bottom dollar is what they really care about.
Agreed. So when we're good for you, um okay, you're good for me because I get this loan. You're good for me because I'm paying this loan. Are you good for me if I fall on hard times and need to say to you when I could have, I used to, are you still good for me? No, no. And like with anything, that's what happens. But like I say, um, banks, businesses are here to make money, to increase their portfolio, to increase their cash flow. So yes, I need you to get this loan, so I can charge you 10% on this loan and give a customer 2% on their term deposit. So I'm making 8% profit. Forrest says if you use a local or a community bank, build a relationship. Forrest recommends sharing good news about your business with your banker and finding ways to promote the bank. Make yourself someone they want to lend to, he says. Yeah, banks don't care who they lend to. As long as they can get that government salary deduction, that's all that matters. They don't mind who they lend to. Then you have capacity, cash flow, what it is, your ability to repay the loan, why it matters. Lenders want to be assured that your business generates enough cash flow to repay the loan in full. Yeah, you could have a business who was doing quite well, but disaster, sickness can come and wipe all the funds that you had away. I remember a customer, they had like over $2 million in the bank. And that customer was a good customer of the bank. The husband got sick. Before you knew it, that $2 million was gone, just trying to spend on medical expenses. So I'm saying today we can say a person has a good personality, a person who would pay their commitments, but at the end of the day, things happen, and therefore we take a risk. Anytime we give a loan to a customer, it's a risk. How it's accessed from financial matrix and benchmarks, debt and liquidity ratio, cash flow statements, credit scores, borrowing, and repayment history. Well, as we know, credit score right now, we can't depend on that because they could say I have a loan and I don't. So, and borrowing history in the climate that we in, yes, you give me a loan because my history from a loan that I had with Finco was good, but the climate that we in now, I can lose my job and things happen, and I'm no longer able to pay my loan. Even though I was a good payer in years gone by, I was a good payer, but things happen and I'm not able to pay the loan. How to master it? Some online lenders may be more open to helping finance immediate cash flow gaps. If you are focusing on local banks, pay down debt before you apply. Also calculate your cash flow to understand your starting point before you head to the bank. Miss Colette, can you continue for me, please?
Okay. So that we're on capital, right? Master of 5 Cs?
Yes.
Okay. Master of 5 Cs of credit. 3, capital, what it is. The amount of money invested by the business owner or management team. Why it matters. Banks are more willing to lend to owners who have invested some of their own money into the venture. It shows you have some skin in the game. How is assessed. How it's assessed. From the amount of money the borrower or the management team has invested in the business. How to master it. Nearly 60% of small business owners use personal savings to start their business, according to the Small Business Administration. Keep a record that shows your investment in the business. That are other ways. However, to acquire startup funding if you don't want to take on all the risk yourself. Now, okay. Master the 5 C's of credit. 4 conditions. What it is, the condition of your business, whether it's growing or flattening, as well as what you'll use the funds for. It also considers the state of the economy, industry trends, and how these factors might affect your ability to repay the loan.
Yeah.
Why it matters. To ensure that loans are repaid, banks want to lend to businesses operating under favorable conditions. They aim to identify risk and protect themselves accordingly. How it's assessed from a review of the competitive landscape, supplier and customer relations, and the microeconomic and industry specific issues. How to master it. You can control the economy, but you can plan. You can't control the economy, but you can plan ahead. Although it might seem counterintuitive, apply for a, what is this whiteout? When your business is strong.
Business line of credit.
Okay.
Business line of credit.
Okay. Banks will always be happiest to loan you money when you don't need it. Farris says, if conditions worsen, they may reduce the credit line or take it away. He adds, but at least you have some cushion for a while if things go south. Master the 5 C's of credit. That's 5 is collateral. What it is, assets that are used to guarantee a secure loan. Why it matters, collateral is a backup source if the borrower cannot repay a loan. How it's assessed, from hard assets such as real estate and equipment, working capital such as accounts, receivables, and inventory, and a borrower's home that also can be counted as collateral. How to master it, picking the right business structure can help protect your personal assets from being seized by a lender. If you are sued or if the lender is trying to collect, forming a legal entity helps mitigate that risk.
Okay, that's chapter 8. And only thing, and if you look at the back, it's talking about the different ratings. But like I said, I don't feel well tonight, but I wanted to finish chapter 9. And I'm saying that I'm going to give you an assignment on chapter 7, probably chapter 6, 7, 8, and 9. I will break it down and it'll be part of a review too, because you know your final exam is coming up soon, and I told you your exam is going to be from chapter 6 to chapter 10. We will spend more time in chapter 10 because chapter 10 is much longer, but I say I will send you the assignment for, it's not going to be due say this week, it'll be due next week. And like I say, no quiz, because for y'all to do a quiz, y'all have to go to BIF. So I'm not going to do a quiz. So that's why I'm going to give you more assignments, so to make up the grades. Okay, so I will chat with you all next week, Tuesday, and I want to be able to give you all the review questions for the finals, at least by the 4th. Which date is that? Anyway, it's the 11th. No, before the 11th, because the exam is going to be on the, before the 12th, the exam is going to be on the 19th. Yeah, I know there's a holiday on the 18th. When is the holiday?
Yes, the holiday is the 18th.
Yeah,
And,
so the exam.
And the final is on the 19th.
Yes, no, yeah. Class finish on the 19th, and there'll be a final exam on the 19th. Okay. So
Miss
I'll try
Smith,
to have, hey,
I know you said you would have sent us her assignment last week.
no,
Did
no,
you
no,
send
that's
it?
why I said, no.
Oh,
That's why I say,
okay.
that's what I'm gonna do now, because I know if I was to give you a quiz, you have to go to BIFs to do it. So I'm gonna give you all more assignments to do, and it will be due next week, Friday.
Okay, all right.
Yeah, because I'm gonna try to give you the assignment from chapter 6 to chapter 9, okay?
Okay.
But I'll break it down in chapter 6 questions, chapter 7, chapter 8, chapter 9 question. I won't give you all in one. I'll break it down so you'll know this. So this was the questions for chapter 6, questions for chapter 7, questions for chapter 8, and questions for chapter 9. And when we come, well, we probably spend two nights on chapter 10, but we'll see what happens. Yeah. Okay. Good night. I don't feel well tonight, so good night.
Good night. I hope you feel better.
I hope you
Okay,
feel
thanks.
better.
Okay, thank you.